Joining us right now to talk about whether the SEC should take more action against meme stock promoters is former SEC chairman and CNBC contributor Jay Clayton. And Jay, this is a kind of a tricky area. Those stocks are down significantly over the last month, but they are still far higher than they had been a year and a half ago, if you're looking at a lot of those names. And people will say the SEC should get out of the way in the good times, and then when people lose money, they will blame the SEC for not have doing something earlier. What's the solution, or is it too late?
Well, you have it exactly right, Becky. It's good to see you. We've spoken about this. The SEC's job is not to regulate prices. The SEC protects investors in a couple of fundamental ways, the most important of which is regulating information. Companies, their insiders, control persons, they have to provide accurate information on a regular basis, a comprehensive suite of that. And if the information that they provide is false, they're subject to liability. That's fundamental. The other thing that the SEC does and we regulate is trading in exchanges. And there, from pricing to anti-manipulation measures to surveillance, there's a great deal done. What the SEC does not regulate, in addition to prices, are the opinions of people who are not insiders or do not have some information advantage. We've never gone there, so the Reddit boards and the like, they are a new medium for that, but we've had opinions about stocks for a long time. So you captured it, Becky.
Well, let's take one of these stocks as an example. And I know you don't normally comment on certain stocks, but if you look at AMC, people will say, oh, you know, the CEO, Adam Aron, sold a bunch of stock. Maybe that's something going on. But he pretty clearly telegraphed and told investors exactly what he was going to be doing. I mean, does it look like there's any foul there?
Well, you're exactly right. We require insiders who sell stock to disclose that they have done so. And some insiders elect to tell people ahead of time that they intend to do so for exactly the reason that you cited. People look at insider sales from a credibility point of view. And the more you telegraph, the more you're clear about whether you're going to be getting longer or shorter in the stock or monetizing the stock, generally, the more credibility there is in your management. So, look, I applaud insiders who forecast that they're going to be getting shorter in the stock. And, of course, they have to comply with our rules that once they sell to disclose it.
All right, let me throw one more example at you. Tesla CEO Elon Musk made a pretty big deal on Twitter saying that he would do whatever the Twitter responders wanted in his polls, should he sell 10% of his holdings or not. Twitter holders overwhelmingly said yes, and he's been selling stock. We understand why. It's for tax obligations to make sure that he can buy the rest of those options that are going to expire if he doesn't get them. But it also became clear that at least some of those sales were preordained, things that had been put into a plan even before that Twitter poll. Does that matter?
Well, yes, credibility matters. And we've been talking, I've had the privilege to be listening to the program for the last half hour, and full and fair disclosure leads to credibility. And you're questioning whether the poll or whatever had all of the information people should have to assess the plans for getting shorter in the stock. And these are the kinds of things that we should be discussing about leaders of large companies. But there's a lot on the positive side as well.
So is that something that you think the SEC should look into then? Did the people responding to the poll have all the information? Is the SEC going to do something like that? And has the SEC kind of had its time with Elon Musk and said, forget it, this isn't worth it?
Well, what I'm going to say is, anytime a company insider speaks about the company or speaks about their holdings and what they're going to do, there is an obligation to have full and fair disclosure, to provide a complete picture of what you're doing. So I'm going to leave it at that.